couple of the other slides that I skipped past were a little more about this, and then gifting, okay? Gift tax. And again, not something we need to spend a lot of time on. When you give money to someone, you're gifting money to somebody, the recipient isn't the one that could be liable for taxes, believe it or not. It's the person giving the money away that could be liable for taxes. But it's the same thing as the death tax, the estate tax. You have an individual, and again, it'll decrease to $5 million in a couple years, but right now you have $11.5 million that you could give away over your lifetime before you pay a gift tax. Who is giving away $11.5 million? Nobody is. So gift tax is not an issue, again, for 99.999% of the people in the United States. Now, there is a threshold on an annual basis that sometimes people do exceed. $15,000 annually, and that was on the last slide, is what you are allowed to gift away before you have to file a gift tax return. It doesn't mean that you pay tax. It just means you have to alert the IRS that you gave away more than you were supposed to or allowed to that year. So for example, if you're a grandparent and you want to give, a grandchild $20,000 to go to college, and you write them a check for 20 grand and you give it to them. Well, they're really only allowed to get 15 from you that year. So you gave them more than they're allowed to. Nobody pays tax on that extra $5,000 that was given. But we do have to tell our accountant, hey, I gifted little Johnny $20,000 this year, so I gave him over the annual amount of 15 I'm allowed to. So we got to note this and keep a tab of it. Over your lifetime, if you have not gifted $11.5 million, or a married couple, $23 million, there is no gift tax, okay? So to summarize, do not worry about the death tax. Do not worry about gift tax. You have to give away millions of dollars, and you have to be worth millions and millions of dollars for this to affect your family, okay? Go ahead.
If you don't file that form going over the...
Yeah.
Is there a problem?
There is. There is. When one spouse passes, you have to make that election on the IRS form. I'm drawing a blank on the form, but you're right. And I believe you have 9 months to make that election. Within 9 months of the spouse passing, you have to make that election on that IRS form, and it has to be submitted to the IRS, right, where your accountant would do that. If you fail to do that, you don't get to port over the deceased spouse's portion. So you still have your own $11.5 million. You just don't get the $11.5 million from your spouse as well, too. So instead of you now having $23 million you could be worth, you can only be worth $11.5 million. And again, a good problem to have, right? Anything else on taxes? Okay. Let's see where this goes. Okay, and again, we can see it has consistently gone up. It was 5 million, 11.4, 11.5. It will decrease a little in 2025, but it's still a huge, huge number.